All right, guys, here we go. This video is for the, almost said economic ninja, the real estate ninja, and it has to do with the home builders ETF XHB, and everyone needs to have a chart of this and watching this near term. And the reason being, we feel very confident that this is going to be a bellwether or a leading indicator, and the charts generally are, quite honestly, a leading indicator regarding where the market's going to go, and in particular the home builders and the whole cycle of the home builders over the next few months, year, what have you. And I believe we could even be able to pretty much time the falling out, the bottom breaking out to the downside on the home builders and everything related to that industry. And as we see down here, the top holdings of that ETF, some home builders actually in here, Lennar, NVR. Now, interesting about NVR, they do have three different groups that they build and sell homes under, but also they have a big part of their corporation is in the home mortgage business too. So just FYI. Also, DR Horton down here. Of course, Lowe's, everyone's familiar with, Home Depot, Carrier, and Johnson & Johnson. So let's jump over to the chart and let's see how that's going to work out. Now, as you can see here, we've already had a big leg down, okay? No surprise there that 200 kind of held price action as price, held support there and pushed to the upside. Now, this is the key takeaway point right here. This is extremely important. Okay, most times you will get a leg down and then price will come up about 50%, half of that leg down. That, the next few weeks is going to be the determination if price can consolidate, and get over that 50% zone and start, running back up to the upside. But most of the time in these type of markets, higher odds, higher probability, that's really all we have to work on. Price will fail to get back up and over that 50% zone, sometimes even consolidate and drop to the downside. And then what you'll end up having, or the price will put in, is an equal to or greater leg down, this next leg down, as compared to the first leg down. So you'll have a big leg down that'll try to, come back up, recover. It'll make it about halfway back up that mountain, and by that time, prices wore out, and then it'll roll to the downside. Now, a key takeaway here will be if we start trading weekly candles, red downsize weekly candles under this 20 weekly moving averages, blue moving average here, which is very important, very key. Now, right now it's beginning to kind of flatten out, which is bullish, positive, and it is, of course, still over the 200, and prices, over the 20, and obviously over the 200. So looking fairly bullish if you did not know about this 50% zone here and the importance of getting it. We're right there at it. So if we're able to, by some hook or crook, be able to get up here above that 67.50 and start consolidating and then move up, then that would be, I think, an absolute miracle. But I would think, and I don't know, theorize that we're going to stay a little bit weak in this market, and maybe even put in another red week or two here upcoming, and then finally roll to the downside. And then that would be, a key indicator, a key indication that obviously the markets are getting weaker. Not that we need to, know that. We know that's coming, but this would be something, tangible you could see on the charts. But okay, guys, thanks for watching, and we will see you on the charts.